Hey everyone, thanks for joining. My name is Alex Sabio. Really excited to have you guys here. Our team's been working really hard on something special for the past few months. We're going to do a presentation. It's going to last about 30 minutes. And then after the presentation, we'll do a quick Q&A. Mike, he's going to be moderating the chat room over there, and we'll get your questions in the end. So go ahead and drop those questions in the chat. So without further ado, Dia, why don't you get us started?
Okay, cool. Yay. Okay. Hi, guys. Welcome to Welcome Capital. My name is Dia Liu, and today you're going to get an overview of what the fund is about and how you can participate in buying short-term rentals and hotels with us. So let's get the not fun legal stuff out of the way first. So we are not claiming to give you financial or legal or tax advice. So of course, with any investment deal, please go ahead and do your own due diligence before investing with us, and confirm with your favorite CPA, attorney, etc. before making any investments in this fund or any other real estate deals. So we started this fund because of two reasons. One is really to help busy professionals as well as busy short-term rental operators diversify their existing real estate portfolio by buying hospitality assets all across the nation. So maybe you already have one or two short-term rentals and you want to diversify. This fund's a great deal for you. Or if you're just too busy to break into short-term rentals yourself, and you want to invest with vetted short-term rental and hotel veterans, this is also a great deal for you. And of course, we're also, our secondary mission or vision is really to create these amazing, beautiful designs and boutique experiences for our guests, and that inspire people to travel more and gather more with their friends and family. And then now my colleague, Nikko, is going to talk a little bit about Fund 101 with you guys.
Thanks, Dia. So just to kind of piggyback a little bit on what Dia kind of started to talk about is why invest in a fund. I don't know necessarily everybody's background. Some people may already own real estate property. Some people may be thinking about it. But a fund is essentially a way that you can invest passively in with us in hospitality assets. So why did we create a fund? You know, some of you may have heard, and we'll talk about this on the next slide, but some of you may have heard about multifamily syndicates where you all get together and you invest in a single property. Well, we wanted to create a fund for risk mitigation. We wanted to create diverse income streams so that you're not putting kind of all your eggs in one basket. It allows you to kind of put in smaller investments rather than putting, buying one property all on your own where you have to put hundreds and hundreds of thousands of dollars into it, as well as your own labor. It allows for diversification. So we're looking at doing, and we'll talk about what our basket mix is a bit later, but any kind of hospitality asset. It doesn't just have to be one STR or one hotel, et cetera, et cetera. And again, the real strong concept is passive income. We're doing all the work, so you don't have to. You can kind of just, sit back and collect the money. Yeah, and just to, I touched upon this a little bit. Again, I don't know everybody's expertise, but a lot of people have sort of heard about syndications, and essentially you're basically combining all your money and investing in one asset. That asset does well, you do well. That asset does poorly, you lose. A fund is much more diversified, flexible. We might be more cash flow focused. A syndication will oftentimes be more equity play, which 5 years ago, that was pretty strong. But as we know, equity going into the future is not necessarily the same as it was 3 years ago. So a lot of these syndications were focused on increasing equity, which, we can be more focused on actually creating day-to-day income. And with a fund, we can pivot. With syndication, you can't.
Yeah. And I forgot to mention, guys, if you have any questions throughout the entire slides presentation, go ahead and type them in the Zoom chat, and we will address them either at the end or wherever it feels really, wherever is the most natural in our presentation. So going on to why invest in hospitality assets. So one, they're awesome. Just kidding. So they are awesome, but a lot of you guys may already have some short-term rentals or some some idea as to why short-term rentals and hotels may be awesome, but we love hospitality assets. One, because of the additional cash flow. So a lot of people in the short-term rental space are able to get maybe 5, 6 short-term rentals and already replace their W-2 income. So this is times many times over, right? So the cash flow normally is going to be at least 3 to 4, 5x more than long-term rentals on any given asset. Another reason is that we love value add opportunities, and we are creating this fund because there's going to be a lot more opportunities that are going to start popping up on the market in the next few months. And we love just adjusting the operations and the design to increase the revenue of hospitality assets. Unlike long-term rentals, hospitality assets are a lot more dependent on operations and design. So by making small adjustments, you can make a big difference in your bottom line. And of course, multiple sources of revenue, not just rental income, but you can also make money from additional revenue streams in a hotel. For example, just using a hotel as an example, you have the front desk that can sell snacks, and having vending machines on site, that could be a very large source of revenue. There's also potential to have a food and beverage play as well on your boutique hotel. And there's just a lot of other revenues, like adding kayak rentals or adding mountain bike rentals, or giving tours. There's so many ways that you can make additional money on top of just relying solely on the rental income. So now we're going to go into quite a few slides about our team. And the reason that we're going to talk so much about the team members is because we want you guys to be assured that you're investing with folks who are already players in the short-term rental and hotel space. So we're going to go one by one to introduce ourselves, and 1 or 2 deals that are in our portfolio as sample deals that we have done. So my name is Dia Liu. I'm a former attorney, and now I'm a full-time real estate investor. I'm based in Austin, Texas, and Bentonville, Arkansas. I double majored in chemical engineering and biochemistry. I got a full ride at law school and practiced patent litigation for 5 years. I own, quite a few short-term rentals still across multiple markets, and as well as 3 different hotels and motels. And then I speak at a lot of nationwide real estate conferences on short-term rental and or hotel investing. I also own a 46,000, actually I think it's 47,000 member Airbnb group called Airbnb Professional Hosts. And some of our projects that I've highlighted here are Candlewick Inn, which we bought. That's 48 keys in Northwest Arkansas. We'll talk more about that later. Cedarwood Inn, which is a 19-unit series of cottages and duplexes in the Blue Ridge Mountains in North Carolina. We'll also talk about that later. And one of my favorite pet projects that's a short-term rental is in Taos, New Mexico. And you can see that picture of that on the right. Alex?
Hey everyone, how's it going? Alex Sabio, married father of 4, live here in Southern California. I've been in healthcare for over 20 years. I'm a respiratory therapist. I've been investing in real estate about the same amount of time. I started with long-term rentals. I've done some multifamily syndications. Currently, we self-manage 6 luxury short-term rentals. I actually just got the 7th one under contract, closing on that one next month. I do have a Facebook group. One of my passions is helping other healthcare professionals invest in real estate. I've spoke at multiple short-term rental conferences, host meetups all the time, I've been a guest on numerous amount of podcasts. I'm also a co-author of a book coming out soon, Hospitable Host. And one of my passions is I love to hike. So see, these are some of my notable projects. I have one in Gulf Shores. It's like a 3-minute walk to the beach. The one in the middle is my favorite one in Pigeon Forge that has an indoor pool and absolutely crushes it. And the one on the right there, that's actually my first short-term rental, still crushing it. So love all those properties.
Hey, my name is Michael REDDOCK, formerly a technologist working at a tech company for the last 15 or 20 years, but quit my full-time job last year and now leaning heavily into real estate investing and being a hotelier. I'm responsible for all the operations at our hotels and our short-term rentals, and I really enjoy that. from Texas, so I love to smoke barbecue and gather people at my house and host poker games. And if you can switch to the next slide, you can see one of the big first projects I had was that Austin STR on the right that I bought with a buddy that I wanted to host my poker games at and barbecues, and that turned into an amazing opportunity where I have 3 STRs in one. There's a beautiful house that I'm sitting in right now in the Bentonville area that we've turned into 3 separate living spaces. And then there is Motel Mia, one of the 3 hotels that Dia and I own together. That one's on the coast of Texas and should be live in about 2 months, and it's going to be beautiful.
Hi, everyone. I'm Nikko Lindley. I started off my career also in high tech, spent about 8 years, and then 20 plus years ago, I decided to leave for my true passion, which was real estate. So I've been a full-time real estate professional for over 2 decades at this point. I have invested in everything from new construction, land, subdivision, STRs, multifamily, syndicates, even international properties. I've owned properties in 6 countries. My passion is travel. And so essentially what I'm building wealth for is to be able to travel worldwide on retirement. So, you know, I know a lot of people are kind of looking for better quality of life, and real estate is one way to get there. And that's why I started. In terms of my projects, Lake Tahoe is one that I bought and did extremely well. And I actually wish I had kept it, but I sold it and bought a place in Barcelona. And the place in Barcelona, I do Airbnb rentals on, and it's going to be my eventual retirement home. So there's other, you know, reasons to buy just besides money. There's also quality of life. The Atlanta property we'll talk a little bit about on the case study.
Hey everyone, I'm Josh Goldstein. I am a producer in the entertainment industry. I started investing in 2020, and within 2 years, I acquired 20 doors, a mix of short-term rentals and long-term rentals. I used methods like Burster, BRRRRs, mainly value add. I love fixing up properties and making them really nice. So I get some equity and then being able to pull them back out and reuse it. I've also been a guest on multiple podcasts. And personally, I love tennis. So that's kind of where I am. I try to play as much tennis as possible. These are some of my projects. Idlewild was a cute little A-frame. We went a little higher end on this. It's in California. It markets to Southern California people. Went high design, high end comfort type stuff in there, and it does very well. The one in the middle is in Smoky Mountains, and this was residence, and it actually had multiple properties on there. There's a cabin that I'm converting. The main cabin that you look at is a 4-3. It was a residence. We made it a short-term rental, did those renovations. It's been up and running for about a year now. The 1-bedroom cabin had a long-term tenant. They moved out. We're now just finishing up those renovations. And then there's going to be some more projects later on in that property. So it's going to be pretty valuable once it's all said and done. And then the one on the right is a little A-frame in Big Bear, California. It's a ski town. I'm sure a lot of you guys know of it. But again, we went a little higher end on this one. Great design, good comfort, and people are loving it.
Cool. Let's talk about the important things, right? The what the deal structure kind of looks like. So we have 3 major tiers of investing in this. So tier 1 is a 50K and up investment. So at that tier, you're looking at a 7% preferred return, or pref. For those of you guys who may not have heard of pref or preferred return before, it basically means that you as a passive investor is going to get paid out before other active operators such as us are going to be paid out. And then at the 100K investment, you're looking at an 8% preferred return and additional investors retreat. So we'll talk more about the non-cash flow benefits of investing in our fund a little bit more later. But we wanted to offer our investors the opportunity to network with other folks as well as us in beautiful destinations. So that's what that is. And then the 200K mark, not only are you getting the 8 pref and additional investor retreats, but you're also getting 1 week of free stays, and subject to availability, of course. but that's going to be mostly a tax write-off. Don't want to say all tax write-off, but probably a tax write-off for you to visit your properties that you have invested in beautiful destinations, so you can spend a lot more time with your friends and family for a lot less and make it a really business trip out of it, so to speak. And then target return. So the equity multiple, we're looking at 2x every 5 years, which just means that we aim to double your money every 5 years. And the rate of return, or the target internalized IRR, or internalized rate of return, is 12 to 18%. And then the distributions is quarterly after stabilizing each asset. And then, of course, it's not all just about the money. Now, money is very important, but a lot of you guys probably are here not just for the cash flow, and a lot of you guys are here not just because you love real estate, not because just the cash flow, but also the lifestyle, right? So if you invest in this fund, you're not only investing for the pref or additional distributions, you're also getting the chance to learn and network with other folks who are in this space and want to achieve financial freedom with real estate investing, love to travel, network with other people who also love to travel. You get to network with us, you get to learn with us, and you get to travel with us. Or if you don't like us, you can travel with your friends and family for free. So,
and one thing to touch on with that slide is that some of you may be interested in doing this kind of investing actually as an active investor. And our aim is to help you, enable you to do that. So you might make a passive investment now, but in future you might want to be more active. And so we do have an education component to this fund.
Yes, absolutely. And a lot of us who are the operators of this fund are already educators in the short-term rental and or hotel space. So absolutely, if you want to travel to one of these investor retreats, to not just network with other investors like you who are passionate about real estate and short-term rentals and hotels, you also get to learn directly from us how to do it, in person. So a little bit about what our target assets and target markets look like. So of course, for short-term rentals, we're focused on short-term rental friendly locations. So what that means is that we're tracking short-term rental regulations, and we're making sure that we're making investment decisions in light of any current or future risks of regulation. And of course, in traditional vacation rental markets. And we are also looking at locations that are within 3-hour driving distance of major metros. So that is within Dallas, Austin, Raleigh, Charlotte, Atlanta, Denver, you name it. So what are the top higher growth cities? We're looking within 2 to 3 hours driving distance from those cities. So we're able to capture the upside and demand for tourism increase in those cities, or around those cities rather. And I also want to mention that for towns that may have strict short-term rental regulations in place, we're actively acquiring hotels to, bypass those short-term rental regulations, because short-term rental regulations, of course, do not apply to hotels and motels. And we're always looking for a great deal. So we're looking at not just turnkey properties, but also value add properties. Maybe we can build more units. Maybe it's currently ugly. And we're always looking at deals to buy that are below the current market pricing. So some of the markets that we're targeting, so we are, of course, targeting way more areas than this, but this is just a small sample of some of the markets we're really interested in. So first of all, Northwest Arkansas. So Mike and I actually moved up here from Austin, Texas, when we bought our first hotel in this area. That's how much we love it here. It was not our intention, but it's just a very, very great, a lot of growth in this area. And Colorado, which is all the mountain and lake resorts, needless to say, it's a great target market for short-term rentals and hotels. Arizona, for the same reasons. Texas, we love all the lake and beach destinations in Texas. We love all the mountain destinations as well as beach destinations in the Carolinas as well. So those are some of the sample markets. And then in terms of asset strategies, so we're focused, of course, on cash flowing short-term rentals, but we're also focused on redeveloping tired mom and pop motels that can use more than just a small facelift, but also a complete overhaul on operations and bringing it to the 21st century. And we are also looking at short-term rental conversions of existing maybe multifamilies or potentially just a cluster of cabins that are currently serving as long-term rentals, or maybe even single family duplex and et cetera in terms of long-term rental to short-term rental conversion. Alex, do you want to talk about taxes?
Yeah, if you guys follow me on social media, I talk a lot about the tax savings. There's some amazing tax benefits to owning real estate. So one of the things we do, we're going to do a cost segregation. So that's been very powerful for me. Talk to your CPA to see if you're going to be able to benefit from some of these deductions here. And the other thing is we're targeting tax-friendly states. So there's some tax strategies there as well. Dia, you want to talk a little bit about the creative financing aspect of it?
Yeah, so of course, there's conventional financing for short-term rental acquisitions, but to really truly scale, you have to think beyond just conventional financing or SBA loans for hotels. So, in a lot of different deals, we're looking at building relationships, or we already have existing relationships with local banks that are able to give us a much more competitive rate for acquiring short-term rentals and or hotels. Maybe, and then also in especially with the rising interest rates, we're able to negotiate favorable seller financing on a lot of these deals, especially hotels at 5-6% interest, for example, which is a really great deal in this market right now. So finally, last few slides are going to be really quick case studies. So this is one of my properties, and I love this deal. So it's a short-term rental that was in Corpus Christi, Texas, which is on the Gulf Coast. If those of you guys are not familiar with Texas at all, I bought this the fall of 2019 for $250K. And I put 10% down, by the way. And I got 12 months revenue of 97K. And then based on those revenue numbers, I was able to resell that to another short-term rental investor in August 2021 for 500K. And I was able to redeploy that capital in 2 additional short-term rentals that were much larger projects. A little bit more on one of our hotels. So this is one of our hotels in the Ozarks, in Northwest Arkansas. So we bought this January 2022 for $750, and you read that right, $750. And that was 48 keys, and we renovated and furnished it for about $500,000, and it was appraised in under 8 months later for $2 million. So that is before there is 1 year of operating financials, by the way. So we fully expect that appraisal value to jump up significantly more after 1 year of operation. And then we're developing the additional acre in the back to build tree houses and A-frames.
Hey guys, so this is one of my favorite properties here. It's one of my strongest performers. It's a cabin that I have in the Smokies. It was my second one. Purchased May of 2021 for $680,000. Have an amazing relationship with a realtor there and got me the deal. In 12 months, it generated $148,000, which wound up being about a 41% cash on cash return. Recently, there was a cabin that just sold for, I believe it was $1.1 million. So that was an increase in equity in $420,000 in just a short amount of time. And amazing tax breaks there, or tax benefits. So I got about $200,000 bonus depreciation that helped me offset my W-2 income. And that's how I got away with not paying anything in taxes legally.
So this is just a little bit of a case study. I was invested in an asset in California, a multifamily that I'd owned for quite a long time that I thought I was going to be stuck with because I had a lot of depreciation and my tax gain would be too much. And I wanted to get into, hospitality assets because I'm in California, I'm in the Bay Area where it is extremely difficult to be a landlord. And so I was done. I ended up selling that property, having quite a bit of gain. I used some creative tax strategies. I was able to, this is complex. We can talk about it offline if anybody's curious, but I created a deferred sales trust. I put part of it into a 1031 exchange into an STR in Atlanta, which has been higher performing for me, even though it cost way less than the asset that I just sold. It appreciated $200,000 in 1 year, actually maybe in 6 months when all was said and done. And then I can use that rest of that money for investing in other assets.
And that is it, guys. So next steps, and we'll talk a little bit more about that, but just reach out to whoever your contact is, if whoever invited you to this webinar, for more information on if you want to consider signing up for our fund. And let me look at some of the Q&As. So you
And
guys
I'll also say, if you go to our website that Alex put out in the beginning, there is a link on there that says join us. If you click on that, it's going to take us to our portal on InvestNext, and you can sign up there. And that's definitely going to be the best place to get updated on when we start opening things up, and all the details will be there first before they're anywhere else. So I'll just post the direct link in here right now. So if you're interested, just go ahead and create an account there.
Yeah. Let's see. Nancy asks, when we invest passively, do we also receive tax benefit? Yes, absolutely. We're passing on all the savings to you guys. So definitely part of investing in a fund is that you do get a lot of the same benefits in terms of taxes as when you personally, like actively operate. Of course, confirm with your CPA before you make any investments with us. Does the tax benefit, and then another tax question as it applies to Canadians, that is not something that we're equipped to answer. So you definitely have to confirm with your CPA. And do you file the K-1? That is something we can talk offline, but we do issue our investors the documents that you guys need to file your taxes. Anyone have any additional questions, fun questions? It can be anything like, what does Mike like to eat for breakfast, aka pizza?
Hi, everyone.
Properties in the Midwest. Oh, go ahead.
Oh.
Sorry.
I'm Nancy, and I came a little late, so I apologize if I missed your introductions, but I'm just curious, how do you guys all know each other? Because you guys seem like you come from different parts of the nation, and just curious how you guys came together as a group.
So
Nancy, the real estate world is small.
Yeah. Yeah. It seems like a big real estate, world, but really when you're in the short-term rental space, pretty much everyone knows everyone in this space.
I know I met Josh, like 2.5 years ago when I first started investing. And then I don't know how I met everyone else. That's kind of how real estate works, right? Kind of just
Yeah.
meet people organically.
Like investor,
networking all the time.
especially short-term rental groups and investing, like you get to know all the people that are making some waves and going to a lot of the events and meetups and stuff like that.
Especially all the content creators, like the most common content creators, they pretty much all know each other. And I think that the fact that we are coming from when I started inviting, when I started thinking like, hey, and also this is something I think that's great, is that we all do come from different backgrounds. So you're getting very different perspectives. Some a little bit more conservative in their underwriting of deals, some a little bit more of risk taking. Some have more of a creative background or, legal background, or some folks come up from a tech background. So some come from appraisal background. So having those kind of different personalities is really good. I think it's a bad thing if everyone in a fund looks exactly the same and thinks exactly the same, and etc. Are you currently looking at any properties in the Midwest is one of the questions. Not currently, but if you have a deal, you can send it to me. I am always looking at deals. I probably analyze over 100 deals every single month between short-term rentals and hotels. So definitely send it to me.
And I would say we always analyze lots of deals in lots of different directions, different locations. For instance, we've been looking at like Wisconsin Dells, for instance, as a potential. So yes, we do look at them. We're not necessarily looking at one right this minute.
Yeah. If it cash flows, we'll take a look. Or if it doesn't cash flow, but it can, we'll take a look. In the typical multifamily syndication, there's an exit at 3 to 6 years and the asset is sold. Are these returns coming from cash flow, and how do we exit the deal if we need to? So you can look at the final fine print of the PPM, but basically this is a 10-year fund. So so it can go up to 10 years. It can be shorter, but it is a 10-year fund. But on the other hand, you are looking at a 2x equity multiple every 5 years, right? So you are effectively getting your initial investment back, you know, in the targeted 5-year time span. And then after that, you're just getting not free money, but, you know, additional cash flow. I receive 7% pref. What is split over that pref? I can send, if for anyone who has like more granular questions like that, we have a cheat sheet that we can, you know, send to you that have all the breakdowns of the returns and etc. like that, or you can schedule a call with us to kind of talk about the final fine prints and stuff like that, and then what your personal financial situation and how that applies to this deal or this fund. And any questions on pref returns and what that means, you can definitely email us as well. Can you share resources and markets you serve, like agents, lenders, contractors, etc.? Can you clarify, because do you mean like so we do disclose which companies are, you know, that we are, if let's say Mike is going to be one of the companies that we do business with, we're going to have all that information in our PPM. I don't know if that's what you're asking, or if you're asking for our complete vendor list, which we are not currently providing to our investors. I'm not sure if I'm answering that question correctly. If so, if you want to re-ask that question and clarify, I'll be happy to answer.
Yeah, that was me. That was one of my questions, and just wondering which contractors, which lenders and everything you guys are using, so we can also do some research ourselves before we start investing 200+K. But also I want to piggyback that off of Alex when he said he had a great agent in the Rockies, or what was it, somewhere in Tennessee, I think it was. Mm-hmm. So yeah, so even those one-off type resources, if I wanted to reach out to you, Alex, let's network and send me some of those resources. You know, that was a one-off.
Okay. Well, so it depends on the market, right? So of course, if you want Alex, real estate agent, that is a very specific question. That's one I'm sure Alex is happy to provide. But if it's like, I'm not sure which market we're buying for sure yet. We do have some target markets that we really like and we really would like to buy stuff in, but we're analyzing deals across all 50 states. And maybe, so we're not going to have an existing list of contacts for all 50 states and all the cities and towns that are good for short-term rentals in all 50 states. Are there boutique hotels that you're targeting in vacation markets? Can you give an example of what the draw is for a small hotel in Arkansas? Which location? Oh my gosh, I can talk about Northwest Arkansas the whole like hour, but I'm gonna make it really short. So Northwest Arkansas has so much. Is in the mountain. It has mountains, it has lakes, it has $13 million of mountain bike trails. It has a lot of corporate travel from the fact that Walmart headquarters is right here. It has a lot of wealth thanks to the Walton family and just all the C-suite execs who live here or travel here all the time. There's like a lot of medical development coming in this area. So there's just a lot of money being invested in this area, and that's why we love it enough to move from Austin, Texas to small town Arkansas, so to speak. And so, yeah, we are targeting mostly outdoor recreational towns in Northwest Arkansas, but we're also targeting a little bit of the corporate travel as well, closer to the Walmart headquarters.
And let me interject. You know, part of the reason that we're starting the fund is because of diversification of risk. So if you think about it, if you have one property and it's in Florida and a hurricane rolls through, you're wiped out. So that's part of what we're doing, is looking at all these different markets that perhaps you didn't think about because you don't know them, or you're in California and you're used to investing in California. And we're targeting kind of a broad spectrum of property classes, types. It's not all going to be mountain. It's not all going to be beach. It's going to be a mix, so that we can take advantage of seasonal fluctuations, differences in weather patterns, et cetera.
Do you hire property managers to run and manage to acquire hotels and STRs, or does a fund? That's a really good question. So we do. We actually do have an in-house team, so to speak. Mike is heavily focused on operations for all our hotels right now. He's also focused on short-term rental operations. But of course, in case we cannot take on every single market in terms of short-term rental management and hotel management, we may partner with additional folks outside of just the core team. But those, any sort of adjacent companies that we're using that may be partially owned by one of us in the fund is going to be displayed in the PPM prominently. Is there any experience on the team previously serving as a general partner in the syndication? So Mike and I have 3 hotels. Now, they're not syndication deals, but they are hotel deals where we dealt with investors. So, and we are able to successfully refinance that first hotel in Arkansas as well within 8 months period, which is a very, very short time actually for hotels, just because normally it takes at least a year or 2 years to really get solid financials to be able to exit a deal like that. And so what else? Are you looking for only passive investors, or also individuals that may want to contribute to building the span of opportunities going forward? For this fund, we're just looking for passive investors, but if you want to actively participate, we can talk more offline about what that looks like. But specifically for this fund, this is for folks who want to set it and forget it, travel with their friends, come network with us, have some fun, and collect some paychecks.
But I think we also wouldn't be against discussing somebody bringing us a really strong deal. I mean,
Yes.
we're all about making everybody money. So if it makes money, we'll consider it. And then just to answer the next question, it was about my property in Spain. So that kind of goes a bit towards the education component of it. You have all these amazing resources in the people in this fund, and we'll be going to these retreats where we can talk about advanced tax strategies, owning property overseas, et cetera. So that's a less tangible benefit of being part of that fund. And for sure, I love to talk about property overseas.
Any other questions?
Yeah, someone said how many partners. So we have 5 active partners in this this fund. Maximum investors in it. So it's a $10 million fund. So however much however many investors it takes to reach 10 mil is how many maximum investors we can have in this one. Extra strategies. I don't know, maybe I skipped over some content on exit strategies. But we are looking to exit in 10 years. So within the next 10 years, we will either sell to an institutional buyer, or we will sell, if it makes a lot more money, to sell piecemeal and sell each individual short-term rental at market price. We will go ahead and sell to retail buyers. Any other questions, guys? All right, I think that's all the questions. Thank you everyone for coming. And Alex, I don't know if you have closing thoughts.
Cindy just asked one last question, asking if the 5 managing members put money in the fund, and
yes,
the answer is yes. We
will be, absolutely. We love these deals, and we might even put some of our short-term rentals, so we might actually seed our fund with additional short-term rentals at fair market price into the fund, so that it's a cash flowing from day one as well. So
yeah, just reach out to whoever, any one of us actually, if you feel more comfortable reaching out to Dia, because she's the rock star here. Just go ahead and reach out to any one of us. Go ahead and click on that website and hit join us, and then you can register in the portal.
Yeah, and then I put my email there, but if you already have contact with Josh or with Nikko, with Mike, with Alex, etc., just feel free to email them if you have any questions.